Hello, scrappers, recyclers, and investors. Welcome to Shark Scrapper Live, where every week we talk about things that are going on in the precious metals market, industrial metals market, and the stocks that are somehow kind of sort of related to the scrapping and recycling business, or scrappers and recyclers. So anyway, welcome. It is great to have you here. I've had a very busy week, as you can tell from watching the videos about all those PCs that I brought in and what I've been learning from that batch. It's been really interesting, but it's great to be here live with you all again today. So we are going to dive right into today's show. Welcome, JCT, That's Right Recycling, CU Scrapping, and Jake Hudson. Great to have you all here. Our friend Scrapping Irish will not be joining us, or at least very likely will not be joining us, and probably will not be going live. Their time change happened over there on that side of the pond already, so there's an hour difference from us. And I think he's tied up at work a bit late today. So I don't think we're going to see Scrapping Irish coming in or be able to go over to his live stream later on. I'll let you know if that changes throughout the course of today. All right, so we are going to start right out getting into gold to silver ratio. Now, we're first of all, let me just say that although I use the APMEX website for these numbers, I am not sponsored by APMEX. Hey, Mike, great to see you. I don't take any money from APMEX. In fact, I usually give money to APMEX. That's who I have frequently used to buy my physical gold and silver. Yes, I do believe that everybody should have some physical gold and silver in their portfolio. APMEX is one of the places that you can do that. Hey, Earl, great to have you here. So the gold to silver ratio, here's the 3-day period. And this interval is going from 86.90, so almost 87, down to 86.23. So even though this looks like there's a lot of swings going on here, there really isn't a lot of money. We're really not big kind of swings going on here. Now, I do want to remind everybody, some folks may not know what the gold to silver ratio is. Essentially, it's how much silver, how many ounces of silver do you need to buy an ounce of gold? It's pretty straightforward. And there are people that have used the gold to silver ratio as a way to trade their precious metals in order to accumulate more precious metals. So let me show you as we go through this what I'm talking about. So right now we're at the 3-day. We've got a lot of ups and downs, but overall there isn't a whole lot. If you were to draw a line from the beginning of the 3-day period to the end of the 3-day period, you see that it is going down. But again, we're not talking about a whole lot of motion there. If we look at the week, well, from the week, it is going up. So that's why I prefer to look at longer term trends. I'm not a day trader. I don't spend all day on my PC. Electronic Scrapper, great to see you. I don't spend all day on my PC looking for these little changes. I'm more of a buy and hold kind of person, whether it's my precious metals or my stocks. So I prefer to look at long-term trends. If we look at the month, it is still up here. So you can see that it is still a little bit up for the month, but we had all of this down activity going on here. And for the 3-month period, we see that it is still up again for the 3-month period. So a little bit up there, but look at all this time it's spent down here below that trend line. Year to date, we are definitely up. Wow, that is very clear. Year to date, we are definitely up. But if you look at this peak, so we went from this peak and we dropped. So we had a peak up here in early March, and now it's dropped off again. For the year, we are up. If we draw a line from the beginning of the year to, from October of last year to October of this year, that is an upward slope. But look at these peaks that we had here, and now we've dropped off from those peaks. And then if we jump right up to the 5-year, this is where things are a little more telling. 5 years ago to now, yeah, we're up just a little bit. But look at this peak here. This was a real big, I mean, we're talking a huge spike up here, well over 100 and what is that, 120. So, and then if we look at the period overall, going back to the early 90s. Hey, Cruiser Mac, great to see you. Going back to the early 90s, we see a little bit of a downward trend, but look at all the time we spent below the trend line. So, gold to silver ratio. How would you use the gold to silver ratio? Well, in a very simple kind of example, and you'll see this if you Google gold to silver ratio, you'll see this example used somewhat frequently. Let's say that the gold to silver ratio was 100. So let's see, where are we right now today? Oops, they don't like to do 24 hours. So we're 86, almost 87. But let's say that gold to silver ratio was 100. So what you could do is you could trade. You would need 100 ounces of silver to buy 1 ounce of gold. So you would trade your 100 ounces of silver, you'd get 1 ounce of gold. Then you would wait for the ratio to drop to 50, and then you could sell that 100 ounces of silver for 2 ounces of gold. So you do 100 ounces of silver to get 1 ounce of gold. When it drops to 50, you trade that gold. You trade that silver for 2 ounces of gold, and that's how you can accumulate gold or your precious metals. Now, unless you are a real precious metals kind of trader, that you really, it's a game that you've got to be very careful playing. You're essentially betting on the future. And you know what they say about forecasting? It's damn hard. And, anything could come around and eat your lunch. So let's look at what's going on right now and why we're seeing this gold to silver ratio, what it is. So if we go up here and we look at silver right now, so we're going to go to the 3 days so that we're synced up. We see that silver climbed up here a little bit. We're in 20, what is this, 23, 30-ish range here. I consider anything from 20, below 25 is buy range. So, hey, Canadian, Eva, how you doing? We're still in buy range, but we saw silver peak up here a little bit. But the more important thing was that look what happened to gold. Gold busted above 2,000. Remember last week gold was not above 2,000 here. If we look back to a week ago when we last spoke, gold was down here at 1987, and now we're up at 220-ish. All right. What happened? Well, the world happened, right? We've got a lot of bad things happening in the world, and when bad things happen in the world, a lot of investors will go to gold as a way to protect their wealth. And I'm not just talking about European and American investors. I'm talking about people all over the world that then like to buy gold. That drives up the price of gold. So with gold prices climbing the way they did, even an increase in silver price a little bit of increase in the silver price here, gold went up quite a bit faster than silver did. That's why we're seeing the gold to silver ratio being somewhat elevated, but it's dropping a little bit only because silver's coming back up here a little bit now. So I don't use gold to silver ratio for my trades. Generally speaking, I like to I usually buy silver simply because it's very convenient and easy for me to buy a bunch of 1 ounce, 5 ounce, or 10 ounce silver rounds or bars. I prefer to buy 1 ounce silver rounds from a reputable mint, like Sunshine or something like that. They're easy to trade later on. And it's a way to, if I need to be able to sell or use that silver, that precious metal for some other purpose. Gold can be a little more difficult to sell because, a 1 ounce gold coin or gold round or gold bar could be $2,000, right? Who's going to fork out $2,000? Fractional gold, if you're buying a half an ounce or a tenth of an ounce or something like that, the premiums are very high on that. So that's why I prefer silver. The premiums tend to be a bit lower. You can buy in quantities that make sense for the average person to sell at some point in the future. I'm not saying that you shouldn't own gold. I've got some physical gold too. It's really pretty, first of all, but it's just you need to have a reasonable balance between your physical gold and silver, recognizing that if you're going to sell it at some point down the line, how are you going to be able to sell it, and who are you going to sell it to? All right, so that's our precious metal discussion for this week. Do any of you pay attention to the gold to silver ratio? I'm curious if there's any of you that seriously pay attention to the gold to silver ratio. So let's see. Roger's saying Chris going to raise prices. I don't know. Certainly, when gold goes up like that, it can lead to board sort increasing their prices. Chris is going to want to see. I think he's going to want to see it stick for a little bit before he raises his prices, and then if Murphy's law holds true, he will definitely raise his prices, because I have a box getting ready to ship to him on Monday, and I've already done the online thing to sell it to him. So yeah, he's probably going to raise prices this week. Oh, that's not fair. He doesn't do that kind of stuff. All right, so yeah, anybody out there, do you use the gold to silver ratio for your decisions on buying and selling your gold? All right, so our safety note for today is it's going to be based on electrical, and there's a lot of things that you could use as a safety note for electrical. But there's a couple things that I think are especially relevant and important to all of us. So one of the first things is inspect your power cords and your extension cords. We frequently find extension cords and power cords when we're scrapping. And you really want to check them and make sure that they're not frayed or that they don't have exposed wire on them, things of that nature. It can be a shock hazard, it can be a fire hazard. So you really want to inspect the cords on your tools and on your extension cords and such. When you are plugging stuff in and out, make sure that you're getting a good solid connection when you're when you're plugging stuff in, and be very careful not to overload either the circuits or your power cord or your extension cords. Hey, Daniel, great to see you, man. I have picked up extension cords, power cords that were very clearly carried a lot more current than they were intended to because of the condition of the insulation. You could very clearly see that. And, it kind of makes me wonder what in the world was somebody doing there. You will also see this in power strips, surge suppressors. Sometimes when you open them up and you're inside there, you'll see the burn marks, the scorching, maybe even a little melting inside of there. So clearly somebody overloaded that power cord or that surge suppressor. And the other big thing is just having too much stuff on the circuit that your facility, whether it's your house, your shop, your garage, is rated for. Now, if you have a properly wired shop or garage, what's going to happen is you're going to pop the breakers. That's what they're there for, right? You start drawing too much, you pop the breaker so you don't overload it and cause a fire. So if you're popping breakers all the time, then that's a pretty clear signal that you're overloading your circuit, and you may need to bring in an electrician to see what you can do to oomph your electrical service. Just pay attention to electricity. It's a little bit different twist on electrical safety than what most people are used to hearing. It's just something to think about in your shops and around all the tools that you're using. All right, so yeah. Okay, electronic scrapper, that's another very good safety point as well. Don't use your tongue to see if it's charged. Oh, man. As far as prices going up at board sort, Mike is saying that Chris is going to wait for a bit. Yeah, he probably will. But Mike, that must mean that you're getting ready to take a load in. I've got some that I'm sending to him. So that's probably why Chris is going to wait for a bit. Oh, man. Big Country Scrapper, welcome. Great to have you here. Okay. So let's get on with our industrial metal. I think we've had some fun with the electrical. All joking aside, though, do be careful with electricals. You don't. Worst case scenario, the best case scenario is you get one of those shocks that causes your arm to go, and you're like, oh man, that hurt. Worst case scenario is it kills you. So you want to be careful there. All right, so we are heading over to our. Here we are. Yes, this is where we are headed. Our industrial metal for today. We are talking aluminum. Now, let's see. This is on the Kitco website. It's another website that I use for buying and selling. They also have some really good charts for base metals, but they also have a lot of advertising. So let's see. I guess we're now advertising for the University of Miami. Well, I can't complain there. I used to donate money to them for shark research, so that's cool. And Wander, whatever. Oh, that must be some travel booking site or something like that. Okay, so now that we're done with the ads by Google, let's get into aluminum. Boy, look at this. This is what we like to see for the 24-hour, even though I don't really put a whole lot of emphasis on 24-hour type movements, but it's nice to see some upward trending going on there. That's nice. But let's look at this 30-day spot price. Now, you look at this and your immediate reaction is, oh my God, we're going down. But if you look at the beginning of the 30-day to the end of the 30-day, yeah, we're going down, but it's not real steep. What's more important is look at this later part of the 30-day period. We see aluminum starting to come back up again. So nice little Boeing effect going on here with aluminum starting to come back up. On the 60-day, here's this spike that we saw, the high point that we saw in that 30-day. So for the 60-day, we saw aluminum climb, and then it fell back off again, and now it's starting to climb back up again. And here are the spikes that we see popping up. We've talked about these spikes in the past. I still haven't figured out, and none of you all out there have suggested to me where these spikes are legitimately coming from. But I got to be honest with you, I've been so busy lately, I haven't really spent a lot of time researching these spikes. I really should. All right, here's our 90-day, and we see that aluminum prices overall are down. And if you look at this 90-day, you see, so here's the end of this 90-day. We're kind of along here somewhere. Boy, it would be really nice to get this 90-day number, back up here again, wouldn't it? So anyway, and if we look at the 5-year, do this. If we look at the 5-year, yeah, that's just not a good thing here with aluminum prices dropping. And boy, that's even worse to use a really big dot like that. So fell off, tried to climb a little bit, but really down here. If from a 5-year perspective, this looks almost flat down here, what we're dealing with right now, with the exception of the spikes that we talked about. But let's go ahead and take a look at what's happening with inventories, because inventories tend to correlate with aluminum, bearing in mind that there's all of the sanctions and stuff going on in the world right now. And that's what we like to see right there. The 30-day aluminum inventory is dropping. So we see right here this very clear drop. If you look back from the beginning of the 30-day period to the end of the 30-day period, you've got a nice drop going on. So we love it when the inventories drop, don't we? Because when the inventories go down, the prices are going to go up. And that's what we're seeing. 30-day inventory dropping. Let's go up here to the 30-day prices. 30-day price. Inventory was dropping. It got to a certain point, and now the prices are coming back up because the inventory is low. So we love seeing the inventories drop. If we look at the 60-day, this is also a very good sign for us. 60-day inventories down. So that's real nice. And we're also at an all-time low right now for the 60-day period, because we had this bottom of the trough here, and now we have another bottom of the trough that's even lower. So inventory levels are going down, and we love that. We can see in the 6-month London Metal Exchange aluminum warehouse levels that these bottoms, they were sitting just above the 48,000, but now we're at this 48,000. Here's the 48,000 line. We're almost touching that. So, we're hitting some 6-month lows here. And that's real good, because that should give us some reasonably healthy prices. Now, of course, for the year, you look at the year and you say, oh, well, what's up with that? I mean, hey, look, we got to use up some inventory here. So we're bouncing off of this line right here. If we bust below this line, that would be a really good sign, because that would mean that prices should really start to recover, bounce back for us, because we've sort of set a floor here that the warehouses don't want to seem to go below. But if it does bust below that, that would suggest that we should see some good price recovery. And then here we are in the 5-year. We had a lot of inventory. That inventory got consumed and started, wrong button. The inventory was slowly recovering, but as we just talked about, it is trying to get consumed again down here. So we're going to see volatility going on in the aluminum market. The aluminum market is not for me, and I think for most of you all, it's not one of those things where you can just stockpile a whole bunch of aluminum thinking that, it's going to make a huge difference. aluminum takes up a lot of space to get any reasonable weight out of it. So, unless you are taking the time and the expense to melt your aluminum into bars of some sort where they don't take up as much space, it's kind of hard to really stockpile your aluminum. For me, aluminum is one of those things that I sell pretty much every week when I go into my non-ferrous yard. It's a part of my cash flow plan. And I do keep a little bit of aluminum behind in the form of aluminum wire, the aluminum that's inside the insulated aluminum wire. I keep some of that behind because I keep planning on doing some aluminum castings at some point. But I'm not keeping aluminum behind the way I am copper as a strategic financial reserve. So what are y'all doing with your aluminum? You selling, you holding it? What's your plan for your aluminum? And let's see. While I was chatting about aluminum, Mike came in here and said that he's got no more trips till next year for board sort. Oh, okay. Yeah, you got a lot going on right now, man. So I get it. I understand. Plus, you need to build up. You like to get your $4,000 or so per trip. So you got to do a little building up there. Roger, I just sold my first load of e-waste to the local yard, laptops and green metal motherboards for about $600 and no drive. Hey, that is sweet, Roger. Very cool. I'll be, that is really nice when you have a local yard that gives you some reasonable prices for e-waste and you don't have to either make the drive to board sort or go through the shipping expenses to get the stuff to board sort. That's really nice. Congrats on that. It's always one of those challenges that I have is the math of what am I paying for postage to ship a bunch of stuff to board sort. I always have to plan on 75 cents to $1 a pound. And there's a sweet spot in that 40 to 50 pound range for boards going to board sort. So at least for me anyway, where I can get it down to about 75-ish cents a pound and be making some good money from board sort. So that's very cool. Electronics Crapper says he only stockpiles cast aluminum in 12-pound bricks. They don't take up much room. Very cool. Yep. I don't know, and I may, like I said, I'm toying around with the idea of some casting projects right now. And here's the thing that causes me the challenge with it. The facility that I'm in right now is zoned light industrial, and I've not been able to get a reasonable answer from anybody on if me doing some small casting projects is going to be an issue for the zoning of that facility. Plus, from a safety perspective, I don't have a hose or a major water connection very close to my end of the building. So I'm really nervous about doing any casting in the shark cage because it just is a little hanky, and I'm really nervous about doing that. And my neighborhood, of course, the HOA would never allow that. Oh my God, I'd have neighbors, out going bonkers if they saw me trying to do something like that. So I've just run into some logistical challenges, if you will, on trying to do some casting projects of that, of reasonable size bars. So I don't know. We might mess around on a smaller scale with it, trying to make little shark's teeth or something like that, and do lighter metal things and lower temperature things. So just to sort of mess around with it. I don't know. I'm still toying around with the idea, but that makes a lot of sense, man, that you would cast them into bricks and then stack up the bricks. Hey, you could really throw off the bad guys. You could build your shed out of aluminum bricks, and then they wouldn't notice, right? If you painted them, they wouldn't notice that the building is actually where the money is, right? It's like Goldfinger making his car out of gold. Oh man. Earl Fowler says he is selling all of his sheet aluminum and keeping all the extrusion and 6063 sheet. Okay. Yep. Cool. Aluminum 36. You're not getting $36 a pound. That's not what you're saying, right? I'm sheet aluminum, 36 pounds. Clarify, please, Mr. Fowler. Clarify that one, if you would, please. All righty then. So that's our aluminum metal discussion for the day. I want to, as I was coming up with the idea of trying to think of what we should talk about for a business topic today. I had a few comments on some of the emails on some of my videos out there, and they, the comments were, talking about some things that gave me the suspicion that we're talking about that, there's this difference between scrapping as a hobby and scrapping as a business. And sometimes people get confused because they're like, well, yeah, I'm making some money at it, so it's a business. But that's not necessarily the case. So let's talk about what is the difference between a business versus a hobby from the perspective of the IRS. Most of us, the definitions, we're like, well, I don't care. Well, you have to care if you're using any of these numbers when you do your tax filing. Now, this is for the United States Internal Revenue Service. My suspicion is that most other countries have similar kind of concerns and definitions and ways that they look at these things. In the United States, you are required to report all income, whether it's from a business or not. So if you are a hobbyist and you sell scrap, you are supposed to report that income. So what some people will do is they're technically a hobbyist, but they don't want to just report income, so then they'll also throw in their expenses, and they think that they can do that. You can only use your business expenses if you have a legitimate business. So that's why it's important to understand the difference between a business and a hobby. The IRS definition recognizes that it can be a little bit of a gray area. So a hobby is any activity that a person pursues because they enjoy it with no intention of making a profit. People operate a business with the intention of making a profit. Many people engage in hobbies. This, by the way, this is straight off of the IRS website. So here you can see the IRS website. So many people engage in hobby activities that turn into a source of income. However, determining if that hobby has grown into a business can be confusing. So here's the kind of things that the IRS will ask in trying to make this determination. So do you carry out the activity in a business-like manner? Maintains complete and accurate books and records. We've talked about this in a previous business note, the importance of keeping good books, accurate books, and why you want to do that. Now, from the one perspective, you want to do that so you know if you're making money or losing money. But the other aspect of the issue becomes if the IRS ever questions whether or not you're a business versus a hobby, you need to demonstrate that you are acting like a business and keeping the kind of records and books that a business would keep. Do you put time and effort into the activity to show that they intend to be profitable? Notice that it's not saying that you have to be profitable. They recognize that there will be some years of profit, some years of not profit, that kind of stuff. But They want to know, the IRS wants to know that you are acting in a way that would lead you to be able to be profitable. Do you depend on the income from the activity for your livelihood? And that one's kind of squishy, right? I mean, some people don't have to live off of the money that they're making from the business that they're doing. That doesn't mean it's not a business. It just means that that's one of the questions that, would be, there's a lot of questions. Not all of them have black and white answers or have a black and white influence in the decision. The taxpayer has personal motives for carrying out the activity, such as a general enjoyment or relaxation. And this is a funny one, because how many times have you heard the phrase, if you are working at something you love, you're never working, do what you love, that kind of stuff. So that would kind of fly in the face of the IRS definition. A lot of us, we enjoy scrapping and recycling, and it's just one of those things that hey, we like it, and if we're going to pursue it as a business, great. Just there's other aspects that would define it as a business, and it's also not saying that it's only a business if you hate doing it, because that's not a very good business model either. Doing something you hate doing. Taxpayer has enough income from other sources to fund the activity. Losses are due to circumstances beyond the taxpayer's control or are normal for the startup phase of their type of business. So, this is a very important aspect for many of us as we get into this. Scrapping is a very capital intensive business. It's like everything is expensive when you start doing this as a business. Scales are very important. You have to be able to weigh things accurately, and good scales are anywhere from $600 to $2,000, right? How expensive are forklifts and high-lows? Yeah, you might be able to get a good deal on one like Mike did with a business that I certainly got a good deal on a pallet jack from one of the scrap yards that I do business with. But those things are still expensive. Tools and our blades and those kind of things. This is a really capital intensive business that we're in. And if you're going to be moving the kind of quantities that you have to move to be profitable in our scrapping and recycling world, then you need to have, something more than a Ford Explorer or a Pinto. Pinto, I'm dating myself. Oh my God. Could you just imagine trying to be a scrapper out of an old Pinto? And pickup trucks are really expensive these days, right? That's kind of like the minimum thing that you need to scrap is a pickup truck or a van. And pickup trucks are ridiculously expensive because there's too many idiots out there who treat their pickup truck like it's a sedan. It's their commute vehicle to go to work, and they just want to drive a great big pickup truck and, compensate for other weaknesses that they have. So yeah, what are your startup expenses? There is change to methods of operation to improve profitability. This is a really important one that, I talk about it frequently in my videos. Is this worth the time spent scrapping this or doing that? And those kind of decisions show that, yeah, you're treating it like a business. Taxpayer and their advisors have knowledge needed to carry out the activity. So, you know what you're doing and you know how to carry it out. And you have people that are helping you with other aspects of your business. So you have an accountant or a CPA to help you with the books. You have, you're either learning how to do websites and YouTube videos and social media where you have people to help you with that. Those are all the kinds of signs that you're treating it like a business and not a hobby. You've made a profit in the past in other stuff. You make a profit in some years, and what kind of profit it makes. And the taxpayer can expect to make a future profit from the appropriate assets used in the activity. So these are the kind of things that the IRS, should they ever audit you, should they ever question whether or not you are in fact a business versus a hobby, these are the kind of things that they're going to want to know. And it's the kind of stuff that you ought to be paying attention to. If you're calling your scrapping activities a business, then make sure you can defend an argument along these lines. You don't have to pass every single one of these to prove it's a business, right? But you do need to be able to pass enough of them that there is no question, yeah, okay, you're treating it like a business. You may not be very good at the business, or your business may be off to a slow start, or those kind of things. But yes, you're doing it as a business and not a hobby. This can be important here in the United States because you don't want the IRS to come in, audit you, and say, yeah, you know what, this isn't a business, so we're going to not allow those deductions that you've been taking for the last 5 years on your taxes. Oh my God, that could get really ugly, right? So that's why it's kind of important to pay attention to this kind of stuff. All right, that's our business note for the day. A little bit dry, but important. All right, now our stock discussion today. For those of you that don't know, all of my stock information is based on what I get from the Value Line Investment Survey. These people do not take any advertising. So all of their information is just straight numbers and analysis of the numbers and the actions that are going on by the industry. So I really like the information because there's no bias, there's no slant, it's just numbers. And what do those numbers and the activities of the business tell us about what's going on? The chemical industry is an interesting one for us. We, in the scrapping industry, we talk about our metals, but there's a lot of chemicals that are involved in and around the stuff that we're operating with. And this first company is one that I'm sure many of you are familiar with. Air Products. So the reason why I suspect you are familiar with Air Products is because they supply a variety of atmospheric, oxygen, nitrogen, and process hydrogen, helium gases to energy, industrial, technology, and healthcare customers worldwide. They are the largest supplier of hydrogen, with leading positions serving the refinery, hydrogen, semiconductor materials, and natural gas liquefaction markets. So you may have actually had bottles of their gases in and around you while you're working, depending upon what you're doing, what you do out there, or where you're going to go with things in your future. So Air Products. Now, here's the thing with Air Products, though. Let me move this out of the way, put it over here. Yeah, we can see that Air Products is a div 0, right? So that means that they have had 17 years of increasing dividends per share. 17 years they've been increasing those dividends. That's a good thing. That's what we like to see, right? But they're only paying 2.4%. So that's not great. I mean, there's nothing exciting about that. And look at the investment that's required to get into this thing. $287 a share. Holy bajoli. Man, I don't know about you, but that's out of my market. I'm not in that league. So yeah, it's a company that many of us probably know. Many of us have seen their products. Many of us probably said, oh yeah, man, I'd love to own shares in them. I use them all the time or something like that. But they're just, it's not one of those things that a lot of us could really get ourselves into. Here we see the cash flow per share, the earnings per share, nice upward trends there. Here's the dividends per share, always moving up. You know, so it's a good, solid company. They make good decisions. They're in markets that are good, strong, solid markets. That's probably why they're so daggone expensive. Now, there is a certain amount of reliability to them and to that dividend, but man, I don't know about you. This is just too expensive for me. I can't afford that. So the other chemical company that's out there that a lot of us know is PPG. So PPG Industries is a global manufacturer of a broad range of performance and industrial coatings. So architectural coatings, optical and specialty materials. So, you may not even realize that you've been working in and around PPG materials when you've been out there doing your stuff. But that's another company that some people will say, yeah, there's a good, strong future there. Maybe that's a good place for me to put some money. All right, well, here's the thing. They are a div zero, so 17 years of increasing dividends per share, which is a good thing. However, they are not qualified in earnings per share or cash flow per share. And they're also very expensive for not much dividend. So, hey, Andrew, great to see you, man. Good morning to you. Those of you that don't know, Andrew is over in New Zealand. So welcome, Andrew. HH Recycling, great to see you. Sorry, I didn't see you coming in. All right, so PPG is another one of those companies where, yeah, it meets the criteria that we're interested in, but holy bajoli, man, I don't know about you, but I just can't afford that. And the dividend isn't great enough for me to put up with these kind of ups and downs and volatility. So this is also a non-starter for me. And so some of you are probably scratching your heads going, well, then why are you talking about it, Shark? If you're not going to recommend the stocks to us, why put them up there? And I do that because there may be some of you out there that the, $100, $200 a share doesn't scare you. And these are good, solid companies that you may have other reasons that you want to be involved in them. Remember, I'm a dividend investor. I'm a buy and hold dividend investor. So my criteria for my investment is going to be different than other investors. And my suspicion is that there are some of you that listen to this who invest for other reasons than I do. So that's why I share things that kind of don't make a lot of immediate sense from the buy and hold perspective. Now, there's another company that I do want to bring to your attention, and I haven't charted them because they haven't met the criteria to be around long enough for me to chart. But I may chart them up when they come around here in another 13 weeks because these cycle every 13 weeks. So I may look at doing a chart for them the next time they come around. It's called Albemarle. Their ticker symbol is ALB, Albemarle. They make chemicals that are additives or intermediates for plastics, polymers, elastomers, agricultural products, and pharmaceuticals. They have facilities in 100 companies, and they have 4 operating units: lithium and advanced materials, bromine specialties, refining solutions, and other. The reason why I wanted to just bring up the name Albemarle is because of their lithium play. They are trying to acquire a large lithium mine in Australia. They already have a lot of lithium. We always talk about lithium. So it's one of those companies that maybe we ought to start paying attention to from that perspective. The quick and dirty on them right now is their share price is $167.73 a share. Their dividend yield is 1%. And I've only got data going back to 2013 at this point. But so far, they look like they're a div zero. So I'm going to dive in on this a little bit harder between now and when this edition would cycle through and see if Albemarle is something that we ought to be paying attention to because of the lithium play and all the interest that's going on with things like lithium. So could be interesting there. Don't know yet, but I just wanted to tease you all with that possibility. All right. Homer saying PPG makes so much different stuff. Yeah, they do. They really do. Yeah. So it's it's a lot like 3M in that regard. They're all over the place with products. They're all kind of tied to chemicals of some sort. So there's definitely a lot there. Electronic scrapper. I'm considering buying into Micron. given their new plants being built for memory chips, short-term investment over a few years. Yeah, that could be. You know what I'm going to do here? I'm going to make a note to. I'm going to make a note and take a look at Micron, and I don't know what edition that they are in at this point, but I will definitely look. And I'm pretty sure Micron is covered by Value Line Investment Survey. If they are, I will. And if the data is reasonably up to date, I will talk about it next week for you. If it's pretty far out of date, then we'll hang on. And when they cycle around, we'll definitely address it. But Electronic Scrapper, I will get back to you on what I can bring up from Micron. All right, so I tell you, how many of you actually do invest in the stock market? Like Electronic Scrapper is saying that he's looking at it for maybe more of a short-term play. And there's absolutely nothing wrong with that at all. Really, it's there. If you've done the due diligence and you understand why you're buying it and why you're going to then sell it at some point, that's a very legitimate plan and use for the stock market. Got to admit, I might even look at some of that myself there, Electronic Scrapper, now that you brought it up. It's not my primary investment methodology. I'm a buy and hold dividend investor, mostly because I just don't have the time to keep digging in and paying attention to them, right? I prefer to spend a bunch of time researching someone right up front, convince myself that they're a good, solid company, then make that investment for the dividends, set them to automatically reinvest every quarter when they pay out, let them continue to grow in that way. And then at some point in the future, when I need to or I want to, it's that part of my nest egg has been building itself without me having to get too involved. Of course, I am paying attention regularly. I mean, I get a new edition of the Value Line Survey every week. So that causes me to go in and look at the stocks at least weekly. Now, they don't review each stock every week, right? It cycles every 13 weeks. There's 13 editions. So it can be 13 weeks before a stock would come back up again. But I pay attention to those stocks, and of course, I'm listening to the reports all during the week and such, as a matter of staying in tune. So, but I'm not a day trader by any stretch, and I'm really boring when it comes to stock investing. I really am. It's like buy and hold. It's about as boring as it gets. So, you know what? We've got a few minutes before it's time to shut down, and our good friend Scrapping Irish hasn't checked in with me. I don't believe that he is going to be coming up live at all here. So I tell you what we're going to do. If I can figure out how to do this, hang on just a second. We are going to go over there, and there, here, do that. Then we're going to come over here and do this. So we're going to do something that we have not done much of on this channel, and that is invite you to come up and join the conversation if you would like to. We have, hopefully you should see the link right there. If you are interested in coming up and chatting a little bit about gold, silver, aluminum, or the stocks that we talked about, feel free to hop in here. We'll see if anybody wants to hop in. I'm not as good at bringing up hosts the way Scrapping Irish is, but this could be fun for a little bit of a change of pace. So let's see if anybody wants to pop up and say hi here. Yes, that's correct. Electronic scrapper, combination of time change and stuff going on at work. So he is he is tied up right now. So we're not going to see him tonight. Cruiser Max says they are called Air Liquide. My French is terrible. I tell you, my French is just terrible. So up in Canada. So Daniel Houston, perhaps somebody has brought this up and I missed it somewhere. What is going on in the world, the possibilities of war? How will this affect the price of metals? We kind of have had some discussions. We've talked a little bit on some things. So, today I was mentioning how with everything that's going on in the world right now, gold is going up. And that's a very normal thing to happen when there's a lot of uncertainty and speculation and concern in the world, a lot of risk. Investors will go to gold because it's a safe haven. So we have certainly, that explains why gold is, 2020 right now. So, that's a very clear response to what's going on in the world. It gets a little more confusing when you talk about other kinds of metals because, there are sanctions that get imposed on countries that are exporters of certain types of metals, a lot of aluminum from Russia, for example, and that creates, is that artificially increasing the demand and therefore increasing the price? Is the black market side of the aluminum trade going to have an effect on what the prices are? Does it, what kind of impact does that have? Yes, there's going to be some impacts, but trying to gauge what those impacts is going to be is very challenging. When I listen to the market reports and the business discussions throughout the week, it's interesting to me that even the quote unquote experts that are out there, the people that get paid a lot of money to understand these kind of things, even they're saying how hard it is to understand what these conflicts around the world, what they're going to do. But I think it's pretty safe to say that they're increasing the price of gold. So driving up the price of gold, I suspect that's also going to drive up the price of silver because, as gold gets more expensive, then people start investing in silver because it's a little less expensive, but it's still a precious metal. So, that we'll see that probably with the gold and silver market. It's a little bit harder to say what's going to happen with, some of the other markets. It also creates a certain amount of confusion because there are a lot of people that used to say that steel prices would follow oil prices, and that got thrown all out of whack between the pandemic and now with all the conflicts that are going on. You've got price changes going on in the oil industry that are completely disconnected now from what's going on in the steel industry. And so that's thrown sort of a monkey wrench in those thumb rules as well. So yeah, that's a hard one, Daniel. It really is. And, I think the one thing that we can say is that the world is going to continue to need steel, copper, and aluminum. And so as scrappers, we are still going to be in this market in some way. Homer's Reluctant Odyssey says he started scrapping to build up a dividend stock portfolio. Yeah, you know what, man? That's awesome. That's a great thing to do, right? You sell the scrap metals, you use that money to then buy your stocks. That's a great thing to do. So yeah, my hat's off to you. It's a good way to put that money to work, especially if you don't need the money to live on, then you're investing it. So it's a great way to go. Electronic scrapper. Silver. I do like refining it for myself and others. Yeah, you're quite the refiner there, my man. Um, and it's funny. The other day I was breaking something down, and a contact came off, probably from a solenoid switch or something like that. I saw it sitting on the operating table. I mean, the working bench, and I thought to myself, "Oh man, electronic scrapper would like this." Just a little dollop of silver on there. Okay, well, I don't see anybody down in the basement. That's fine. It's cool. Scrapping Irish is not going to go live, so we are going to wrap things up then. I want everybody to have a great week. Stay safe. Remember to watch out for your power cords. Don't get yourself electrocuted. Do not use your tongue to see if the circuit is live. And we will see all of you next week. Take care.